I want you to think about the last time you bought a bank. You haven't? Right, because normal people don't buy banks. Most people don't even know what a bank actually is. You look at a massive stone building with columns or a glowing logo on a skyscraper, and you think that is the bank. It isn't. A bank is an invisible ledger of trust. It is the agreement that when you put your life savings into their vault, it will be there when you come back. But what happens when that trust is broken? What happens when a bank goes under? Regular people lose everything. Businesses can't make payroll. Factories shut down. Families are destroyed. The government panics. The suits in the Capitol run around setting up committees to figure out who to blame. The public demands blood. But the real players, the guys who end up running the world, they don't panic. They don't protest. They look at a burning building and they see prime real estate. His name is Tony Elumelu. And this is the story of how a kid from Jos, who started his career knocking on doors selling photocopy machines, orchestrated one of the most ruthless, brilliant, and arguably unhinged financial takeovers in African history. Welcome to All In. You decide. Inspiration or war? To understand the sheer, terrifying magnitude of what Tony Elumelu achieved, you cannot look at the Africa of today. You have to look at the war zone he stepped into. Nigeria in the 1990s, the military era. General Sani Abacha is in power. The economy is buckling under the weight of inflation, volatile oil prices, and intense political instability. The structural adjustment programs have left deep scars. And the banking sector? The banking sector is an absolute bloodbath. This wasn't a market correction. It was a purge. Banks were being run like personal piggy banks by corrupt owners and meddlesome politicians. Insider lending was rampant. Regulation was struggling to keep up with the sheer volume of financial malpractice. By the mid-1990s, the system violently cracks. 57 commercial and merchant banks are officially declared distressed. Millions of depositors are trapped. Eventually, the Central Bank of Nigeria is forced to step in and violently liquidate 22 banks. 22 banks. Gone. Wiped off the map. There is panic in the streets. The Nigeria Deposit Insurance Corporation is overwhelmed. The old guard of the financial sector is terrified. Nobody wants to touch a failing bank. They are viewed as toxic, radioactive waste. But where the establishment sees a graveyard, a 34-year-old outsider sees his opening. But how does a 34-year-old outsider get the audacity to walk into a financial graveyard and start buying bodies? You have to look at the origin code. March 22nd, 1963. Jos, Nigeria. An Igbo kid is born into a family with roots in Delta State. He isn't born into generational banking wealth. He doesn't inherit a trust fund. But he is born into something perhaps much more dangerous, an entrepreneurial household. During a 2022 Stanford Graduate School of Business View from the Top interview, sitting on a stage in California, speaking to an elite crowd of MBAs, Elumelu looked back on this era. He told them exactly how his brain was wired. He said, "Entrepreneurship is in my DNA." His mother owned and ran restaurants. He grew up watching her run the floor. He didn't learn business from a textbook first. He learned it from watching her manage cash flow, deal with brutal overhead costs, and handle the daily chaotic survival of a physical business. He watched the hustle.
I was privileged, lucky, blessed to have been mentored in this journey of entrepreneurship. First are my parents, especially my mom, who was an entrepreneur, small scale. But the lessons I imbibed, watching her, supporting her, continue to help me today. and it's also critical in the message and advice I give to young entrepreneurs. I learned from her about hard work. She was extremely hardworking at the time. To date, she just turned 94 and she's still very hardworking. She will cook for me and I call it. I said, send your driver to come and pick food. And I'm like, Mom, I have so many people to cook for me. But that spirit in her remains ever so strong.
He studied economics. He got his degree at Ambrose Ali University, and eventually his master's at the University of Lagos. But here's the thing about Elumelu. He didn't wait for a diploma to start moving money. During his mandatory National Youth Service Corps year in Sokoto, way up in the north, he wasn't just doing his state-mandated duties, he was scanning the environment, and he noticed a market inefficiency. He started buying baba ringa, the traditional three-piece local costume, and handmade local mats. He packed them up, shipped them down to his friends in the south, and sold them at a premium. He was running a cross-country arbitrage operation out of his dorm room before he even had a real job. He understood supply. He understood demand. But most importantly, he understood how to sell. In 1980s Nigeria, a master's degree and a side hustle do not guarantee you a throne. They guarantee you a spot at the very back of a very, very long line. He doesn't start in a boardroom. He starts on the pavement. In his own words, and this is a direct, verified quote from the man himself, he said, "I started my career as a salesman, a copier salesman to be specific, young, hungry, and hardworking. But the reality was that I was just one of the thousands of young Nigerian graduates, all eager to succeed." A copier salesman. I want you to really think about what that job entails in 1980s Lagos. You are hauling heavy equipment. You are walking into office buildings where you are not invited. You have to charm the security guard. You have to bypass the receptionist. You have to convince a manager who is already annoyed by your presence to give you 5 minutes of their time. You face rejection 99 times a day just to get one maybe. You see, when you sell copiers, you aren't actually selling a machine. You are selling efficiency. You are selling a vision of a better running office. You are selling your own absolute, unshakable confidence. It is the ultimate psychological training ground. You learn to read a room in 3 seconds. You learn what people actually care about versus what they say they care about. And Tony Elumelu? Tony was very, very good at selling himself. Let's talk about the exact moment Tony Elumelu decided the rules didn't apply to him. A year after his master's, he sees an ad for an entry-level position at a new generation bank called All States Trust Bank. It's a great opportunity, but there is one massive, seemingly insurmountable problem. The ad explicitly demands a minimum 2-1 degree, a second-class upper division. Tony Elumelu had a 2-2, a second-class lower division. By every standard HR metric in the corporate world, his application belongs in the shredder. Most people see a hard requirement like that, and they don't even apply. They fold and walk away. But the copier salesman doesn't fold. He writes a cover letter. And this letter is an absolute masterclass in audacity. He wrote, and I quote, "I know I may not have met the qualifying criteria for the advertised roles, but I am intelligent, driven, ambitious, and I will make the bank proud. My 2-2 degree does not demonstrate the full extent of my intelligence and ability, and I know I can do so much more. My degree does not demonstrate the full extent of my intelligence. It is arrogant. It is bold. It breaks every rule of corporate humility. It is exactly the kind of letter a mid-level hiring manager throws straight into the trash because it threatens them. But this letter doesn't go to a mid-level manager. By a stroke of luck, or fate, or sheer statistical anomaly, that application lands on the desk of the bank's chairman and CEO, Chief Ibatimi Benigo. Why does a CEO care about a letter like this? Because Chief Benigo wasn't looking for paper pushers. In the volatile, high-stakes Nigerian economy of the 1990s, you don't just need book smarts. You need killers. You need people who will kick the door off the hinges when it's locked. He reads those words, He feels the swagger, and he takes a chance. He brings the kid in. He survives the rigorous interviews. He gets the job. And once he is inside the machine, he is unstoppable. Within 12 short months, this 27-year-old kid goes from being an entry-level analyst to a branch manager, the youngest bank branch manager in the country. He's rising fast. He's learning the plumbing of the Nigerian financial system from the inside out. He is building his network. But for a guy like Elumelu, managing someone else's branch is just playing in a sandbox. He doesn't want to manage the bank. He wants to own it. But let's stop right here, because this is the exact moment where the standard billionaire mythology usually lies to you. The story of the lone genius. The myth that a man builds an empire completely by himself in a dark room. The truth about building a 33 trillion naira machine is that you cannot build it alone. You need an anchor. You need someone who holds the line when the entire financial system is trying to rip you apart. In 1993, 4 years before the bloodbath, 4 years before he took over Crystal Bank, before the money, before the power, before the Cowboys of Banking nickname, Tony Elumelu married a young medical doctor named Awele Vivian. Now, let's kill the other myth right now, the myth of the billionaire in-laws. Dr. Awele didn't bring massive generational trust fund wealth to fund his acquisitions. She wasn't a shortcut to the top of the Nigerian elite. She was a physician who studied medicine at the University of Benin. She was building her own career, practicing medicine in Nigeria and the UK. When Tony Elumelu made the decision to take over a failing, toxic asset like Crystal Bank, he wasn't just risking his own career. He was making a bet-the-house maneuver that could have buried his young marriage under a mountain of debt they could never, ever repay. She didn't tell him to play it safe. She didn't tell him to stay a branch manager. She held the line. And eventually, she wouldn't just be his anchor. She would become the architect of half his empire. But that is a story for later. Which brings us back to the bloodbath. 1997. The central bank is cracking down. The banking purge is in full swing. One of the distressed, bleeding institutions caught in the crossfire is a place called Crystal Bank. It is insolvent. To put it in perspective, Crystal Bank is sitting on a massive financial crater. They are posting a loss of 6.49 million naira. They owe money they simply do not have. The non-performing loans are choking the life out of the balance sheet. The old guard, the established money of Lagos, they look at Crystal Bank and they see a corpse. They see a toxic asset that should be left to rot in the sun. If you buy a distressed bank, you aren't just buying a brand. You are buying their debt. You are buying the anger of their depositors. But Tony Elumelu is 34 years old, and he is not the old guard. If you want to own a bank in Nigeria, and you don't have billions of dollars of generational wealth to start a new one from scratch, you can't afford a healthy one. You have to buy a sick one, and you have to cure it. Now, right here is where this story is starting to feel scripted, right? It sounds exactly like a movie. The young, hungry underdog coming out of nowhere, rallying his crew to take on the establishment during a national crisis. You are probably waiting for the montage music to kick in. But I promise you, every move, every calculated risk you are about to hear is documented history. We don't have to invent the tension. Tony Elumelu provided plenty of it himself. Tony gathers a small circle of investors. They don't have the massive liquid capital of the billionaires. They are the outsiders. So they get creative. They get incredibly dangerous. Allegedly, they engineer a brilliant high-wire act of a deal. They execute a leveraged takeover. They agree to take on Crystal Bank's massive debt. They effectively owe the depositors themselves. They restructure the liabilities, promising to pay them back over time while injecting fresh life into the operations. It is a massive gamble, a bet-the-house maneuver. If they fail, they aren't just out of a job. The central bank will destroy them. They will be buried under a mountain of debt they can never, ever repay. The old guard of the Nigerian financial sector looks at this 34-year-old kid and his friends pulling off this high-stakes, aggressive maneuver, and they don't call them visionaries. They are offended by their youth. They are offended by their sheer, unapologetic audacity. So they give them a nickname, a title meant to mock their aggressive tactics. They call them the Cowboys of Banking. Tony doesn't run from the nickname. He leans into it. He embraces the danger. He immediately strips away the tainted, failing Crystal Bank name. He rebrands the institution completely. Standard Trust Bank, STB. And then, standing in front of the press, the regulators, and the establishment that expects him to fail, he makes a public, seemingly insane promise. He declares that he will take this resurrected, formerly failing bank and turn it into one of the top 5 largest banks in Nigeria within 7 years. 7 years! From distressed, toxic asset to top 5. The establishment laughed. It was an arrogant bet. It was the kind of promise that usually ends a career when you inevitably miss the deadline. You don't take a corpse, put makeup on it, and tell everyone it's going to win a marathon. But the old guard didn't understand the playbook Tony was running. He wasn't playing their game. He was rewriting the rules of Nigerian finance. How do you turn a massive loss into an empire? You hunt where no one else is looking. First, they democratized the branch network. While the old banks fought over the commercial hubs, STB aggressively expanded out to the states. They went to the people. But the real masterstroke, the absolute genius play that secured the empire, it happened in 1999. Nigeria returns to democratic rule. A new government means new money flowing to the states and local municipalities. STB positions itself perfectly. They provide massive credit facilities to state and local governments. But they don't just hand out loans and hope for the best. They secure those loans with irrevocable standing payment orders, ISPOs, tied directly to the monthly financial allocations of those governments from the Federation account. They locked in the government's revenue at the absolute source. It was ruthless, brilliant, guaranteed cash flow. The results were staggering. In barely 7 months, they took Crystal Bank's 6.49 million naira loss and turned it into a 473 million naira profit. By the end of 1999, STB became the first Nigerian bank in history to declare an annual profit exceeding 1 billion naira. He didn't hit the top 5 in 7 years. He did it in 5. 5 years to conquer the Nigerian banking scene. He turned a toxic asset into a powerhouse. From a copier salesman hauling machines on the pavement to a branch manager at 27 to the CEO of a top 5 national bank before he even hit 40. But if you think he stopped there, you haven't been paying attention. Standard Trust Bank was just the warm-up. Because in Tony Elumelu's mind, conquering Nigeria wasn't the endgame. Africa was. He needed something bigger. He needed a Goliath to his David. He needed an institution with a legacy so massive, so entrenched, that taking it over would rewrite the rules of African finance forever. He was about to find it. But to take over UBA, he was going to need an astronomical amount of cash. He was going to need a handshake that would change African history. And he was going to need a massive 2 billion naira lifeline from a fellow billionaire named Femi Otedola. A loan that would eventually spark one of the bitterest, most brutal corporate feuds the continent has ever seen. But that is a story for the next file.